Hi, everybody. This is Lance from ThetaTraders.com. This video I want to go over a new safeguard trade that I just placed this morning on Tuesday, May 28th, 2024. This is a semi-hedge. I wouldn't quite call it a full hedge, but it's a very interesting trade with the low VIX environment that has a really big trap profit and could possibly do really well if the market drops. So I'm going to look at the trade that we placed. So this morning we sold a 4,200 put. This was a 0.05 delta, 171 days out on ES. And then I bought a put debit spread, 4,800 bought put, 4,500 sold put, and there was no net credit on the trade. Look at the activity tab, it's got filled on it and got 0.75 credit, so pretty much nothing, a few bucks there. And main reason why I did that is this gives a really big hedge of a 300 width. And because of that, you have this huge trap profit. The max profit on this trade would be $15,000. And what's also interesting about this trade is it only used about $600 in buying power. Now, this buying power could easily go up from here. If the market drops, you're going to need more buying power. So I'd keep a few $1,000s in buying power for it. Not quite a true hedge because there is a possible downturn if we get really, really far out of the money. So currently, ES for the Z expiration is 54.50. Hate when this actually changes and you gotta zoom back again. So 54.50. And then we sold out to the 4,200, right? Yep. So you'll notice at the 4,200, it starts to drop at this point, but we're still in a pretty good profit zone from the 4,200 all the way down to around 39.25 or so. So there's a much bigger possible profit than just the sold put. And the reason for that is I have that 300 with the debit spread, where if the market goes below 4,500 at expiration, this will be a max profit scenario. Now, ES has a 50 multiplier. And then if I times that by the 300 width that we just made in our put debit spread, that's how I get a $15,000 possible max profit if the market does a pretty big drop. There's a break even around 39.25 or so. So if we look at how far out of the money this trade is, 54.50 minus around 39.25. The market would have to drop 1,500 points, a little bit more, in order to hit just the break-even point. If I do 15.25 divided by the current price of 54.50 for the ES contracts, we're looking at almost 28% out of the money just for the break-even point. Now, there's a good chance in the end that the market will pretty much stay where it is, because this is where our current price is. And you can see that there's not much profit on this one. However, if the market drops starting at that 4,800, a little bit below it, we're going to start gaining more and more profit at the expiration date. Once we hit that 4,500 or lower, you'll be at the max of the put debit spread. That's where you get your really big possible profits there. I'm going to be considering rolling up the 4,500 put for about 150 width. So I'll probably move it up to the 46.50 or so and around 120 days out. We do have a lot of time on this trade, 171 days out. What's really interesting about this trade is because the VIX is so low, I was able to go down to that 4,200 really far out of the money. And that's what allows me to get this trade on for a break even. If the VIX was higher, it could actually go lower. However, there'll be more volatility and then I can move the market pretty big. The probability of profit is 99.5%. Again, there's not going to be much of a chance to get down here. Considering this with my other positions, it will hedge out partially because it is a 1-1-1 safeguard trade. We do have technically two sold puts. We have that sold put at the 4,500 and a sold put at the 4,200. So if the market does crash initially, that will hurt us. However, if there's a relatively slower drop, this will start to get closer to this area, and then it should hedge well against my other positions. So I currently have an ES 90-day hedge that I put on will expire worthless. I have another put debit spread from an earlier safeguard that's going to expire worthless most likely. Still have quite a few of these 112s for ES with the 50 width here. This one I sold at 1975 on the two naked puts, and it's currently at 3.6, so about 81% profit. I'm going to be trimming that pretty shortly once it hits at least 90% profit. I have another one at 64 days out at the 4,300. This one's also at a really good profit of 75%. And then I'm going to be leaving on these put debit spreads here, one here. Also have some hedges. Then I have some a little bit further out. And all of these will be useful if the market drops a bit, because it's going to pretty much cushion the blow, so to speak, on if the market drops, those put debit spreads will start to pay off or possibly pay off. So pretty heavily hedged in this account. I do 90-day hedges of put debit spreads every month. I'll be doing one shortly at the end of the month. I'll also be adding on this new trade that I just talked about. There's a good chance I'll be continuing adding this on possibly every month, and then possibly roll out some of those sold calls on the put debit spread, sorry, sold puts on the put debit spread in order to get more profits. So if you found this video interesting and helpful, please click like, subscribe to the channel. Hopefully help the algorithms and whatnot. If you have any questions, feel free to leave a comment down below this video. And if you're interested in joining me and over 300 like-minded individuals for selling options for premiums, you can join at thetatraders.com. Everyone have a good rest of the trading day, and see you guys on the next one.